Hello, I'm Robin Gibson, and this is your Harvard House Money Morsel. Welcome back. Thank you for joining us. Please don't forget to like and subscribe. Click the bell so that you get a notification every time we release a new video. Today I'm sitting with Willie Pelser, Chief Economist of Harvard House. Willie, welcome. Thanks for joining us.
Thank you again.
We've seen that the darling of the share market, Naspers, had an incredible jump. I think it was over 25%. Can you help the viewers to really understand what makes a share jump like that and maybe some context around it, please, if you wouldn't mind?
Thank you, Robin. Before I get to the 25% up on the day on Naspers, I just want to put one or two things in perspective relating to numbers like that. We always say you have to be in the stock market at all times. Don't try and time it. And I think this is an excellent example of that. If you've been away from Naspers, or if you've sold your Naspers, whether you've sold everything out or a little bit down, and you've missed this 25% on that day, you can't get it back, if I can put it that way. Also, to put it in context, in South Africa on the same day, a company which we really like, Udeco, also had a trading update, and they were 6% up on the day. Again, if you're not there, you're going to miss that. A second thing that we always talk about is the market needs certainty. Now, around Naspers specifically, coming back to the 25%, there was this whole uncertainty because for 2 years, the market has been struggling with the concept of how the undervalued situation of Naspers relative to its net asset value will disappear. A year ago, around September or before September, there was an attempt to do this. Process was split out from Naspers to give you the two listings. Remember, these entities hold has a holding in Tencent. So the market was waiting because in the previous attempt sort of failed on the market. So now the market was waiting. What is Naspers process going to do to unlock this value? On the day, certainty came. They will again buy back shares, etc. But there was also a change in the way management is remunerated and so on. So there's a much more certainty. And we as investors were rewarded based on that certainty. Naspers is going to do something. The market rallied 25%. Some of the small detail within that announcement specifically was they're going to, almost on a daily basis, buy back a little bit of Tencent shares to unlock this value. So it's not a case of a big bang, sort of what they tried previously type of thing. And it's small. It's big numbers, but it's small in relation to all the outstanding shares in the market. So that was the event, was actually just certainty again around that. And hopefully the trend will continue to unlock this value. What we've seen previously, I think Michael might have referred to it in one of the conversations, is there's this elasticity in the markets. It's like a rubber band. It's just stretching and stretching and stretching. And at some point, it releases and then gets back to some form of real value or true value or whatever. And I think that's to some extent what's happened on Naspers.
So, Billy, in terms of investing as a whole, often, I guess, as a fund manager, you take a position, you understand some of the underlying thing or concepts, and then you have to wait for the certainty to happen to unlock your value. And that's really what investing for the long term is all about, isn't it?
Yeah, and Robin, I think in Naspers' example, one has to put it in context. That certainty came. Now, in analyzing, it was also results presentation on the day. So Naspers' process gave us more detail as to what is all the businesses, what's been happening in all the businesses over the last 6 months, actually the last year, because this was final results. And if we go into that and we analyze specifically, remember this is a big entity. So process or Naspers owns process. And Naspers owns the South African assets, being, call it the print media, and it's got Takealot in there specifically. And in the process mold is all the E stuff, the computer age for that matter. There's payment systems, there's education systems, there's classifieds in there. So it's quite a few businesses, and then there's hundreds and hundreds of small little businesses. And going through the numbers, the uncertainty or not so much uncertainty, there's a bit of warning lights within. We know Naspers' trading philosophy is we find something that might be a niche, for instance, food delivery, go into the business, they are loss-making, and then over time they trade themselves into a profit. Unfortunately, out of these results, some of these numbers doesn't gel quite nicely from an investment perspective, because these entities are still loss-making and some of them have actually made some bigger losses. So yes, we will fine-comb through these just to see how we will structure Naspers within portfolios. It's not to say that we will exit or whatever the case is, but we work on a risk basis, whether we have a large percentage in a portfolio or a small percentage. So we are working through these numbers. And just quickly on the side, the other certainty that's starting to come through consistently is China, because China at some stage had this big clampdown on how people spend time on the internet. Just in summary, that had a huge impact on Tencent. Some of those restrictions are lifted, and the e-business in China is on the up again.
Great. Willie, thank you so much for giving us an insight into some of the workings in the background. Thank you for joining us. Enjoy the rest of your day.